The debt supercycle that came for the U.S. and Europe after the 2008 financial crisis could be knocking on China's door. They would be lucky if it was only as bad as that and not something more akin to what happened with Japan. As the world's second largest economy grapples with a brewing property crisis and growth slowdown, the global markets are on edge. Let's bring in Harvard economics professor and former IMF chief economist Ken Rogoff with more. I was shocked yesterday, Ken, at how the Wall Street Journal didn't mince words. They said that it is over, the model that has benefited China for the last, what was 1978 till now. It's, 40 years, basically. Is it over? Is it 3%? Is that the best they can expect now? Because that's like very sort of average and nothing China-esque.
I think we are at a turning point. I mean, you have to give credit to the Chinese authorities that they've lasted with this high growth as long as they have. But I think they're coming to the end of the line, especially on this sort of construction-led growth, the infrastructure, real estate, which if you combine them and look at the direct and indirect effects, might be 30% of their economy. And the thing is, they're very good at it. And they built a lot at this point. I mean, Japan had the famous bridges to nowhere. China maybe will have the high-speed rail to nowhere. They're coming into diminishing returns, like every Asian economy hit, Russia hit. And on top of that, obviously, the centralization of power can't be good for growth. They have aging, demographics. So, I think 2 to 3% would be a good outcome for the next decade for China. And they're grappling with the possibility that that transition could be really painful because property prices are under a lot of pressure. Local governments are incredibly dependent on selling and reselling land for revenues, and they have a lot of debt. Yeah, there's some solutions, but it's not so simple. They may face not a Western-style financial crisis, but a Chinese-style financial credit strains that could still be pretty bad.
Japan finally grew at 6%, Ken, so it was only 30 years that it took to sort of extend, sort of work off all those excesses. Is this going to be is it akin to that at all? Is that wrong to think of it that way?
Well, Japan's clearly on the extreme side of financial crises for whatever reason. So where China is not in a financial crisis yet, but where it is its growth model is no longer going to deliver high growth. They're just running into diminishing returns. And at the same time, the innovation that China had been showing, for example, in the tech sector, I think that's also been stalling, obviously, because of a lot of the measures that the government has taken to sort of take over a lot of the major companies. China remains the second largest economy. It's going to remain the second largest economy. But all those hyperbolic predictions about China just being twice the size of the United States before you can blink, I think you can forget about that they're going to take a long time to sort of meaningfully overtake the U.S. economy, if indeed they ever do.
Knowing you as I do, I don't expect you to be able to talk about the repercussions of what this means. But there are so many, what it means for us, what it means for the global economy, what it means for President Xi, what it means for the average Chinese person who was counting on getting out of, to get a standard of living similar to the developed world. Because the GDP is still, and I was referencing it, your chess moves, you're always like, you're a grandmaster, you're 20 moves ahead. So it's not wrong for me to ask you this. But, $12,800 of GDP. People want more than that. Is Xi and his position, is he going to be as popular and as safe as if he can't deliver economically? And if he's not, do they get more aggressive on the world stage? Is it a problem for us?
Well, those are really good questions. Certainly, I would guess that President Xi maybe saw this coming. And that's part of the reason he's tightened his grip in general. As far as his position being weakened, I mean, I'm afraid to say if we look at autocrats all over the world, Iran, Venezuela, Cuba, North Korea, Russia, this has not been a period where they're easily overthrown. That modern technology seems to make it easier for them to stay in power. But absolutely, there's a concern that, up until now, I think China could feel it was winning at the globalization game. It was growing fast. It could be patient because in the long run, I was just going to get everything. And I think when it starts seeing its horizons more limited, which we're probably seeing, and absolutely the typical young person is not nearly as optimistic about the future as they might have been 5 years or certainly 10 years ago. And it's a concern that it might lead to more issues on the global front. Obviously, the Taiwan Straits is a tremendous concern. And coming back to what you said, China, it has been the big story of the last 40 years. If you step back at what's happened in the world, the Chinese growth has been phenomenal. I know that progressives say we've reached this age of greater and greater inequality. No, not when we look from a world perspective. Hundreds of millions of people have been lifted out of poverty into the global lower middle class, at least in China. And if that's changing, it just potentially affects everything. The U.S.-Chinese relationship is the most important relationship in the world. I'm glad that the U.S. is trying to pay attention to it. But let's face it, we've taken a more aggressive stance since Trump, and Biden has not let go of that. And we're facing, more of a Cold War II, more of deglobalization. I think in the long run, by the way, the impact on the U.S. is going to be more inflationary than deflationary, because I think the low cost and high productivity in China was helping central banks keep inflation down.